Thank you, Hank. I appreciate you not talking, Hank.
Thank you, Henry. Ladies and gentlemen, I'm presenting the ARV Fund, the Stock Market Challenge of 2013. I will begin by addressing the economic climate and my goals when I created my portfolio, so you will understand why I bought the stocks that I bought. First, the government shutdown was happening. It was the third longest government shutdown in U.S. history, lasting 16 days. And experts had conflicting feelings on how that would affect the market. So that was a big decider in some of my stocks. Because of the government shutdown, consumer confidence plummeted, which was reflected in a few of my stocks. And that hurt the market for a little bit, a few weeks. Also, the Fed decided to continue its bond buying, which is good for interest rates, lowers interest rates, but because they keep on pumping money into the U.S. economy, if they do it too much, inflation may occur, and according to most people, inflation is bad. So my goal was safety. I saw all these and a red flag went off in my mind saying buy safe stocks, buy stocks that if a recession happened, they would do well, and my goal was not to lose any money. My stocks I will be presenting in order from making most money to losing the most money. And my best stock was Costco Wholesale Corporation, founded in September of 1983 in Seattle, Washington by James Sinegal and Jeffrey Brotman. It went public in '85 at an IPO of $10, and in 1993 it merged with Price Club, another wholesale club that nearly doubled its retail stores. Also, it was listed as the 24th of 2012's Fortune 500. Also, the only company to go from 0 to $3 billion in sales in less than 6 years. Obviously very successful, and this is a map of their retail stores in the United States. Why buy Costco? Well, first, as you guys remember, I was predicting bad times, and sellers of non-durable goods usually perform very well in recessions because non-durable goods, which include foods and clothing, do have inelastic demand, which means even if the price for bread goes up, people will still buy bread. Also, because there was an article that we discussed in class saying that the Fed wanted to voluntarily increase inflation. Increase inflation means a general rise in prices, which of course would increase company profits. So Costco was a good choice. I bought it at $115.86 and sold it at $125.43 for an overall profit of $1,646.04 for a return on investment of 6.87%. And it was hit a little bit by the government shutdown, yet rose steadily after that. My next bank was Toronto Dominion Bank, started as two separate banks. First, the Bank of Toronto started in 1855, and the Dominion Bank started in 1867. And in February of 1955, they merged to take advantage of the post-war construction and production boom. Just as in the United States, people were coming home, building houses, they decided to merge so they could use their funds to give out as many loans as possible. That is TD Center in Toronto. Why buy TD Bank? Well, first there was the turmoil caused by the government shutdown in the United States, and I felt like I wanted to take my money elsewhere. Also, I really wanted a bank because thanks to the Fed pumping more money into the economy, interest rates were low, so more people would be running to the banks to take out loans. I bought this stock at $89.31 and sold it at $98.41 for an overall return on investment of 1.06%. And even though I wanted to avoid the effects of the government shutdown, it still had a slight impact on the stock, but after that it rose steadily. Next, I picked Dell, which is my third stock and the first stock that began to lose money. Michael Dell started Dell Incorporated as PCs Limited in his University of Texas Austin dorm room in 1984. And he went public in 1988, which is also the year that he changed his company to Dell Computer Company. It went public also in '88 with an IPO of $8.50, and it became a Fortune 500 company in 1992, making him the youngest Fortune 500 CEO, second only to Mark Zuckerberg of Facebook. Why buy Dell? Well, I knew that we were in the expansionary phase of the business cycle, which is very good for tech stocks. Also, Dell announced a partnership with Oracle, which Oracle is a very large software company, and I thought that the partnership of a computer company and a software company would have a synergistic effect. Synergy is when two things are added together and the sum is greater than the sum of its parts. So basically 1 + 1 equals anything more than 2. Performance, I bought the stock at $13.88 and sold it at $13.86 for a loss of $28.08. Actually, my stock went private October 29th, so I had to liquidate all the stocks into cash reserves. And obviously it stayed steady the whole time, except for a dip in consumer confidence from the government shutdown. Fourth is the Ford Motor Company, founded in 1899 by Henry Ford as the Detroit Automobile Company. It changed to the Henry Ford Company in 1901. He started off by producing his Model A's, his Model K's, and his Model S's, where the steering wheels were all on the right side, with not much success, but as we all know, he made history by using the assembly line and producing his first left steering car, the Model T Ford. Ford went public in 1956, which is very strange because they spent 50 years private. Henry Ford himself did not want his company to go private because he felt that he did not want the average person to have stake in his company. So they had to wait till he passed away and his ancestors gave permission for the company to go public. And that is the logo, also known as the blue oval, which has a length to width ratio of 8:3. Surprisingly, the handwriting inside the logo is not that of Henry Ford, but that of his chief engineer and design officer, Child Wills. And that is a picture of the new 2015 Mustang, which has sort of been getting bad reviews from the American reviewers because it's kind of lost its traditional look and adopted more slick European styles, such as that really resembles an Aston Martin. Why buy Ford? Well, the auto industry has been having a boom recently. The latest monthly stat shows that the total vehicle sales have stayed at an annual rate of above 15 million for the 6th month in a row as of November. So I wanted to get in on that. Also, low interest rates caused by the Fed pumping more money into the economy attracted more people to take loans, which would attract more people to take loans for expensive things such as houses and or cars. Performance, I bought the stock at $17.29, sold it at $17.08 for a loss of $242.76. There was the dip in because of the government shutdown here, and this large little growth was when the company reported earnings of 45 cents per share, which shattered estimates of 38 cents per share. Lastly and worstly was the SPDR Gold Trust. It was created in 2004 by the chairman of the World Gold Council, Christopher Thompson, when he wanted to create a way for the average person to invest in gold easier. Before this, investing in gold was a little difficult because gold bars are very big, tedious, and it's expensive for security reasons. Why buy gold? Well, I was betting on a risky economic future. So when consumer confidence goes down, gold usually goes up because investors rush away from assets and the dollar towards more safe commodities such as silver and gold. Also, gold thrives during a period of inflation. So I was betting on the Fed pumping too much money into the economy and causing inflation. And when inflation occurs, the power of the dollar goes down and investors run away from assets and dollars towards more safe commodities such as gold. performance, I bought it at $128.91 and sold it at $120.70 for a loss of $1,280.76. This is my only stock that performed well during the government shutdown. Obviously, people were rushing away from assets towards gold, and progressively did bad as the stock market did well. In the end, I did not lose any money, which was my goal, but I didn't gain much. As you can see, this is a graph of the Dow, the S&P 500, and the NASDAQ. They did extremely well after the government shutdown, which was not what I expected, and therefore I did not gain much money. Thank you for listening.